Welcome to Bunnex Investment Group. In this video, we are going to talk about the best free indicator for intraday trading and how to use it. Be sure to be part of our free signals Telegram channel. I'll leave the link in the description box below. Make sure you stick up to the end of this video to fully comprehend and understand so that you'll be able to apply this in your own trading. Firstly, we need to define what intraday is. It is basically a style of trading where we come to the charts each and every day to look for trading opportunities, and if obtained, we exit the same day. So there's a popular saying that says, show up every day, but do not trade every day. That as well apply to intraday trading style. You come, yes, to the charts each and every day, but if there is no trading opportunity, it means it's a pass. This type of trading requires robust rules to follow so that it will not be stressful. And in this particular video, we'll define all the steps up to the point of market entry using the free indicator. This first step in this particular style of trading is anchor location. What is anchor location? It is a process of getting a point of market reverse. The market usually goes up or down or ranges. So we are trying to say we only trade when there was a previous flow of market to the upside or to the downside. And do not worry, I'll actually show you all the steps on the charts. So after this, we want to locate a point where the market will reverse to the downside after an upside or to the upside after a downside. So for market maker traders like us, it is either a peak formation low or a peak formation high. And for those not into market maker method, may use market structure, whereby an uptrend is when the market breaks structure to the upside and the vice versa is true. We are saying probably you've located a point of reverse, and to confirm if you are now in a new trend, we will need to see break of market structure to the upside or to the downside. After determining the points above, the next part is the most important part, whereby we now need to see the signs from the indicator for entry. But before we talk about that, we have an important announcement to make. For those who wants to master the market maker cycle like the back of their hand, be able to sniper 5 to 8 trades per month, call tops and bottoms with crystal clarity, highly patient, then this 2 weeks program is for you. We are going to start on the 15th to the 26th of May 2023, and the fee for that program is $200. Contact us through our Telegram channel. Alright, so the second step is top hand evidence. Since reversal point has been seen and validated, we need to see a market pullback. If we have broken structure to the upside, we are saying we need to see a pullback towards a reversal point. In other words, we are saying this is a temporary move against the actual trend. End of the pullback is where we are interested, and we can call it point of market interest. To make our entry, and the next part is how we do it. So the last but not least and the most important is this part, whereby we do what we call shark fin recognition. The Traders Dynamic Index is the most powerful indicator for intraday trading style. Step 1 and 2 prepare us for step 3, where we look for a TDI shark fin as a sign of the end of a market pullback. Shark fin is whereby the TDI RSI line peers out of the bands, and when it comes back, it's time to shoot. Let's have an illustration. So this illustration is going to simplify everything that I have talked about earlier. The first thing is to locate a point of reverse, which we've said in our case we call it a peak formation high or a peak formation low for a different market context. After seeing that point, we need to see market flow or break of structure for those who do not trade using the market maker method. After that, usually after the first day away from the peak, we now need to see the next parameters met. The first thing is actually to see the price pulling back, and the pullback must be outside the market structure for that particular day. In this particular day, we had this as the market structure, and then the pullback went outside, because in some cases you'd see a pullback but still inside the market structure for that intraday. So in this particular case, the market went above the highest price of that particular day, and at that highest price we now need to see it being a confluence with a shark fin on the TDI. So we are saying, one, it's location of an anchor. Two, it's actually seeing a pullback as evidence of stop hunt and going above or below the high of that particular day. And then the last thing is to see a confluence of the TDI shark fin. Let's now have examples on real markets. So this is gold against US dollar. The first thing we've said is actually to locate a peak, and for the scope of this particular video, we are not going to define how peak location is done using the market maker method. So after location of this peak, we can see, for those who do not trade the market maker, break of structure after the market went above. Therefore, we now have evidence that we are in an upward market context. The next thing is now to see the market give us a pullback, and this pullback going beyond the low of this particular, in this particular case, we had this day whereby it opened as a consolidation. It actually opened as a consolidation, and after opening as a consolidation, we can see the market pulling out of the daily structure to the downside. After that, we can see that on the TDI, there was a corresponding shark fin, which was actually in line with the trend that we have set. So after that, we can now enter at a candlestick reversal pattern within the markets. Usually, your target should be an intraday target of 30 to 50 pips, depending on the average daily range of the pair that you are taking. So why do we need the market to go outside the structure? It's because you can see there were a lot of shark fins within these daily, still in the daily structure. So we need price to go outside below the high, below the low or below the high of that particular same day, and then it issues a shark fin like that. Let's have another example. In this particular case, it's EuroCAD. And on EuroCAD, we had this as a peak formation high, and after that we had several days on the rise. Then after that, we can see that we had a break of market structure as a way to see that we are now in a new trend. Then after that, we can see that this particular day actually went up above the high of that day, and there was a shark fin. Therefore, this was going to offer us a point of market entry. But a perfect example for what we are looking for is this one, whereby we have a daily structure, the high of the day, and a violation of the high of that day, and then after that we had a shark fin. When the price comes back within the bands, that is when we look to get our entry. Or when we see that, we can see a candlestick reversal pattern being formed, and that is also a sign for market entry. So basically, it's location of a peak or break of market structure, then piercing above the high or the low of that particular trading day, and then you can have the confluence with the TDI as a shark fin. If you follow that with consistency, I actually guarantee you that you see a positive equity growth. On that note, we come to the end of today's video. I'll see you in the next one.